Gabung Brevet Pajak IAI, pilihan tepat untuk Anda. Pelatihan Brevet IAI, ahli pajak, bedah substansi, temukan solusi. Kenapa memilih IAI? Modul yang selalu update dan materi yang dilengkapi dengan pembahasan studi kasus komprehensif. Instruktur yang terjaga kompetensinya, berpengalaman dan tentu saja profesional. Apa aja yang didapat kalau belajar pajak? Sudah pasti, kita jadi tahu seluk-beluk perhitungan pajak. Menjadi kuasa hukum perpajakan mewakili perusahaan, meningkatkan karir dan menunjang profesi. Kalau ingin menjadi konsultan pajak, belajar brevet pajak juga bisa sebagai langkah persiapan USKP. So, banyak kan manfaat belajar brevet pajak? Sebagai benefit tambahan, IAI melaksanakan program kuliah umum perpajakan dengan menghadirkan narasumber dari praktisi dan profesional di bidang perpajakan. IAI juga melaksanakan gathering alumni brevet untuk senantiasa mengupdate informasi perpajakan. Kalian juga tidak perlu bingung, karena IAI menyiapkan berbagai pilihan waktu belajar, jadi dapat disesuaikan dengan kebutuhan. Bagi teman-teman mahasiswa, IAI juga memberikan harga khusus mahasiswa aktif. Selama pandemi, IAI juga tetap hadir dalam pelatihan brevet pajak secara virtual dengan menggunakan platform Microsoft Teams. Hal ini juga memungkinkan untuk dapat diikuti oleh peserta dari seluruh Indonesia. Dan, untuk diketahui, pelatihan brevet pajak terapan IAI juga diperkuat dengan MOU antara IAI dan Direktorat Jenderal Pajak. IAI juga memiliki kompartemen akuntan perpajakan. Yang salah satu kegiatan rutinnya adalah menyelenggarakan regular tax discussion yang mengupas isu perpajakan terkini. Pelatihan brevet IAI hadir di 6 knowledge center di Jabodetabek. IAI Knowledge Center Menteng, Moy, Serpong, Kedoya, Fatmawati, dan Sumarekon, Bekasi. Selain itu, dengan standarisasi nasional, pelatihan brevet IAI juga hadir di beberapa IAI wilayah di Indonesia. Nah, jadi tunggu apa lagi? Ayo segera daftar pelatihan brevet pajak terapan IAI. Pelatihan brevet IAI, ahli pajak, bedah substansi, temukan solusi.
What kind of tomorrow do you want to shape? A connected world, working together to prosper and thrive. Training as a chartered accountant puts you in a position to make a real difference, giving you the skills and perspectives to build the tomorrow you want. Become a difference maker. Become a chartered accountant.
Gerakmu, hadirkan semangatmu, hatimu dan mimpimu, satukanlah dalam asamu. Tunjukkan baktimu, kuatkan imanmu, raihlah prestasimu. Satukan tujuan, siapkan masa depan, jaga akuntabilitas. IAI mengabdi, bersatu dan berbakti, untuk ibu pertiwi. Selalu berkarya dan jaga integritas, Ikatan Akuntan Indonesia. Langkahmu, gerakmu, hadirkan semangatmu, hatimu dan mimpimu, satukanlah dalam asamu. Tunjukkan baktimu, kuatkan imanmu, raihlah prestasimu. Satukan tujuan, siapkan masa depan, jaga akuntabilitas. IAI mengabdi, bersatu dan berbakti untuk ibu pertiwi. Selalu berkarya dan jaga integritas. Ikatan Akuntan Indonesia, Ikatan Akuntan Indonesia.
Ikatan Akuntan Indonesia berdiri pada 23 Desember 1957. Akuntan muda tanah air mengambil prakarsa pendirian IAI, dipimpin oleh Profesor Sumarjo Citro Sidoyo. IAI didirikan untuk membimbing dan mempertinggi mutu pendidikan akuntansi,
Recording in progress.
di mutu pekerjaan akuntan. Sejak itu, IAI berkembang menjadi organisasi profesi akuntan. dan standar profesi. Pilar 2. Meningkatkan kepercayaan publik kepada profesi akuntansi sebagai pemimpin dalam pengembangan ekosistem keuangan dan keberlanjutan. Pilar 3. Memperkuat perlindungan hukum dan praktik keprofesian akuntan di berbagai sektor di era keberlanjutan. Pilar 4. Meningkatkan tata kelola organisasi IAI dan memperluas kerjasama dengan pemangku kepentingan profesi akuntansi. IAI siap mengawal perekonomian Indonesia menuju Sustainable Development Goals. IAI tumbuh, kuat, dan berkelanjutan.
Assalamualaikum warahmatullahi wabarakatuh. The Honorable Vice Chairman of Board of Commissioner of Indonesia Financial Service Authority, OJK, Bapak Mirza Aditya Suara. The Honorable IAI Presiden, Bapak Dr. Ardan Adi Perdana. The member of the OJK Commissioner Board, Bapak Ogi Prastomiono, who joining us by online, and also Ibu Sophia Watimena. President Director of Indonesia Stock Exchange, Bapak Iman Rahman. Secretary General of the Audit Board BPKRI, Bapak Bahtiar Arif, who joining us by online, and Director General of Audit Planning Evaluation and Development BPKRI, Bapak Bernardus Dwita Pradana, the member of International Accounting Standard Board, Profesor Antarka, the Chairman of IAI Supervisory Board, Bapak Profesor Mardiasmo, and all the board members, Bapak Ibu IAI Advisory Board members and IAI Council members, the Chairman of Indonesia Financial Accounting Standard Board, Bapak Indra Wijaya, and all the board members, Bapak Ibu Representative of IAI Compartment, IAI Regional Offices, Honorable Guest Representative of Public Listed Companies, participant, ladies and gentlemen, good afternoon. From the main hall of Indonesia Stock Exchange, welcome to the IAI International Seminar, IASB Update, the latest development in IFRS in conjunction with the launching of SAK International, a full adoption of the IFRS accounting standard. Ladies and gentlemen, to start our seminar today, I would like to invite you to sing the national anthem Indonesia Raya, and we'll continue with IAI Mars. Ladies and gentlemen, please rise.
Gerakmu, hadirkan semangatmu, hatimu dan mimpimu, satukanlah dalam asamu. Tunjukkan baktimu, kuatkan imanmu, raihlah prestasimu. Satukan tujuan, siapkan masa depan, jaga akuntabilitas. IAI mengabdi masa depan, jaga akuntabilitas. IAI mengabdi, bersatu dan berbakti untuk ibu pertiwi. Selalu berkarya dan jaga integritas. Ikatan Akuntan Indonesia. Ikatan Akuntan Indonesia.
Ladies and gentlemen, be seated. Ladies and gentlemen, to open our seminar today, let us hear the opening speech from IAI Presiden, Bapak Dr. Ardan Adi Perdana.
Honorable Bapak Mirza Aditya Swara, Vice Chairman of the OJK, Ibu Sophie Watimena, Member of OJK Commissioner Board, Bapak Ogi Prastomyono, Member of the OJK, who is joining by online, Bapak Iman Rahman, President Director of IDX, Secretary General of the Audit Board, Bapak Bahtiar Arif, who is also joining by online, Professor Antarka, member of International Accounting Standard Board, Professor Mardiasmo, Chairman of the Supervisory Board, and all the board members, IAI Advisory Board members, Bapak Indra Wijaya, Chairman of the IAI Financial Accounting Standard Board, IAI National Council, IAI members of the board, representative and the compartment and regional offices, honorable guests, representative of the public listed companies, participants, ladies and gentlemen. Assalamualaikum warahmatullahi wabarakatuh. Good afternoon and welcome to this historical gathering. Today marks another important milestone in our journey towards creating a transparent and accountable financial reporting ecosystem in Indonesia. One that would accommodate Indonesian business aspiration to go global and beyond. Indonesia is the 16th largest economy of GDP in the world and the largest in Southeast Asia. IAI, as the recognized professional accountancy organization, is fully committed to support our country's aspiration as part of the G20's commitment for adoption of a single set of high-quality accounting standards. This continues to be reflected as part of our priorities, including our strategic plan for 2022-2026. The International Financial Reporting Standard, or IFRS, as published by International Accounting Standard Board, is the globally accepted standard for financial reporting. IAI has been leading our country's effort in converging to IFRS with the support from and collaboration with our key stakeholders, including, among others, the OJK, IDX, the SRO, and Ministry of Finance, Central Bank of Indonesia, and the large firms. Adoption and implementation of these standards must be complemented by a strong commitment to enforce from our regulator. We recognize the important role of our key stakeholders in ensuring the success of our IFRS journey. Allow me to take this opportunity to express my appreciation to our stakeholders for their full support and commitment. Ladies and gentlemen, in 2016, IAI together with OJK and IFRS Foundation signed a joint statement reiterating our commitment for collaboration toward adoption and implementation of IFRS in Indonesia. This was an important part of the convergence process that we, through the Indonesian Financial Accounting Standard Board of IAI, has initiated and continuously progressed. We understand that our IFRS journey must eventually lead to full adoption of the standard. With this commitment, on December 12, 2022, our board has ratified the SAK International, a word-by-word full adoption of the IFRS accounting standard. This harmonization signifies a major leap in our adoption journey to further align our financial reporting practice with the global best practice. We believe that this will better facilitate seamless business operations, attract foreign investment, and bolsters Indonesia's position in the global economy. I am delighted that today we are celebrating another important milestone in our IFRS journey with the official launching of the SAK International. SAK International will be recognized as the official approved translation of the IFRS accounting standard. With this, Indonesia's adoption status will be elevated, similar to our fellow G20 member Japan, who permits the use of IFRS accounting standard in its jurisdiction. IAI will continue to work with our stakeholders, particularly the regulator who have the authority to permit the use of SAK International for businesses in Indonesia. Ladies and gentlemen, in addition to the launch, I would like also welcome you to our IAI International Seminar. We are honored to welcome IASB board member, Professor Antarka, who will provide first-hand update on the latest development of IFRS. This seminar is part of our commitment to update our stakeholders and keeping abreast with the latest development in IFRS. With the launch and seminar, IAI is strengthening our role as a key stakeholder of the Indonesia financial reporting ecosystem, and the Dewan Standar Akuntansi Indonesia, Indonesian Accounting Standard Board, IAI as the recognized standard setter in Indonesia. I would like to urge you to use this opportunity to learn from and engage Professor Antarka and our experts. Ladies and gentlemen, allow me to conclude by thanking everyone who have played their part in the organization of today's event, as well as in our ongoing IFRS journey. The dedication and hard work of organizing committee, the support of our esteemed speaker, and the participation of our members and attendees are all crucial to the success of this seminar. As we embark on our journey to implement the SAK International, let us embrace the opportunity ahead. Let us capitalize on this moment to deepen our knowledge, expand our network, and elevate the standards of financial reporting in Indonesia. Thank you. Assalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam warahmatullahi wabarakatuh. Terima kasih Bapak Arden Adi Perdana. Ladies and gentlemen, next we would like to invite Bapak Iman Rahman, the President Director of Indonesia Stock Exchange, to deliver his opening speech.
Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. Om Swastiastu, Namo Buddhaya, Salam Kebajikan. Good morning to all our distinguished guests. First of all, I would like to greet to an honorable guest, Vice Chairman of the Board of Commissioner OJK, Bapak Mirza Adityaswara, and other member OJK who present today, Ibu Sofia Watimena, and also Pak Ogi Prastomiono, member of the International Accounting Standard Board, IASB, Mr. Antarka, Chairman of Oversight Board of Indonesia Institute of Accountant, Prof. Mardiasmo, Chairman of the Executive Board of Indonesian Institute of Accountant, Bapak Ardan Adi Pradana, member of Advisory Board IAI, Board of Commissioners of SRO, Pak John, Pak Karman, Pak Nur Rahman, Pak Arisandi, Director of SRO, who present today, Pak Samsul, Pak Nyoman, Pak Jeffrey, distinguished ladies and gentlemen. Alhamdulillah, praise to Allah Subhanahu wa Ta'ala for His merciful and grace, so we can attend and gather in a good condition at the main hall of Indonesia Stock Exchange to attend the launching of the SAK International. First of all, on behalf of IDX, I would like to welcome you to come to main hall, and I would like to congratulate to IAI for the launching of the International Financial Accounting Standard or SAK International, which has gained recognition from the International Accounting Standard Board of IASB. The full adoption of IFRS accounting standards is a significant move forward for entities and business in Indonesia. In the era of global economic integration, harmonization of financial reporting standards is important to enable seamless business operation across borders and encourage global trade and investment. With the SAK International, scale of listed company in Indonesia do not need to make two financial reports with different standards, local and international, to address the needs of their Indonesians as well as global investor and stakeholders. Therefore, I'm delighted with the launching of the SAK International today and certain that this milestone will enhance comparability and transparency of financial reports, allow investors and stakeholders to take better decisions, attract cross-border investments, and in turn, strengthen both Indonesia and global economy. Distinguished ladies and gentlemen, IDX and IAI have been working together for a long time for the development of SAK in Indonesia, especially related to financial reporting, standard of listing companies, and the capital market industry. We arrange sharing sessions and seminars on accounting and financial reporting standards to all our stakeholders to ensure that they are well informed and equipped regarding the recent updates and development in financial reporting standards. In these occasions, I would like to thank IAI for all your support to the IDX and the industry. I hope that the launching of SAK International and the international seminar today will run smooth and to be beneficial for all of us. Maybe for all of you know that main hall is an obligations to deliver a pantun, Pak Mirza. So I start to give a pantun in Bahasa. Because to be honest, I cannot speak pantun in Bahasa Inggris. So I speak in Bahasa. Nonton sepak bola sampai babak final. Perginya dengan teman-teman sebaya. Selamat atas peluncuran SAK Internasional. Semoga IAI semakin sukses dan berjaya. Thank you very much. Wabillahi taufiq wal hidayah. Wassalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam. Bapak Ivan, please kindly remain on stage for the ceremony of launching of SAK International. And now I would like to kindly invite Bapak Mirza Adityaswara, Ibu Sofia Watimena, Bapak Ardan Adi Pradana, Bapak Profesor Mardiasmo, Profesor Antarka, and Bapak Indra Wijaya to join Bapak Iman Rahman for the ceremony of SAK International launching.
Oh, yes. Oke, have to push, Pak. Sesi kedua, Pak, trading. Karena kalau opening bell tadi. Ya, push. Ini sesi trading kedua, Pak.
Ladies and gentlemen, we will witness the
Second session
launching
of trading.
of SAK International as the full adoption of IFRS accounting standard on my 3,
And
1, 2, and 3. Ladies and gentlemen, you may return to your seat. Ladies and gentlemen, we just witnessed the launching of SAK International. SAK International is a word-for-word translation of the IFRS accounting standard, which is a mandatory requirement for the full adoption of IFRS accounting standard and will be updated every year in accordance with the effective date of the IFRS accounting standard. SAK International is an additional pillar of the financial reporting Indonesia that will take effect from January 1st to 2024. SAK International is an option for entities that meet the criteria set by regulator. Ladies and gentlemen, let us watch the video of SAK Journey. Ladies and gentlemen, who would like to humbly invite on stage the Vice Chairman of Board Commissioner of Financial Service Authority, Bapak Mirza Aditya Suara, to deliver the keynote speech.
Assalamualaikum warahmatullahi wabarakatuh. Salam sejahtera bagi kita semua. Profesor Antarka, member of the IASB, Pak Ardan Adi Perdana, Ketua IAI, rekan saya Bu Sofi Watimena, Dewan Komisioner OJK, rekan saya juga Pak Ogi Prastomyono yang hadir di online, Dewan Komisioner OJK, Kepala Eksekutif IKNB. Tadi juga hadir Pak Inarno, Komisioner Pasar Modal, Pak Iman Rahman, Dirut Bursa Efek, dan tentu seluruh Dewan Direksi. Kemudian Sekretaris Jenderal of Audit Board PPKRI, Bapak Baktiar Arif, joining by online. Pak Prof. Mardi Asmo, Dewan Pengawas IAI, dan Bapak Ibu dari Dewan Pengawas IAI, Dewan Penasehat IAI, Pak Sabto ya, Pak Robert juga ya, dan Bapak Ibu dari Dewan Penasihat IAI, Pak Indra Wijaya, Chairman of the IAI Financial Accounting Standard Board, IAI National Councils, Member of the Board, Representative of the Compartment and Regional Office, Honorable Guests, Representative of the Public Listed Companies, and participants, and ladies and gentlemen. Bapak Ibu sekalian, my background is monetary economist. But of course, financial reporting is a very important part of this country if this country want to be a developed country. Let me explain to you first, or I'll inform you about what we as Board of Commissioner OJK, that we currently 10 months, yeah, as a Board of OJK, what we have been doing and what we try to achieve. OJK, the main job, the main task is to regulate, to supervise, and to protect. To regulate and to supervise financial industry and to protect the consumer of financial industry. In the new Omnibus Law, Financial Services Omnibus Law, OJK together with Minister of Finance and Bank Indonesia, we get a new mandate is to develop, mengembangkan financial services industry, so that It is not only about potentials, protections, but also about how to develop market, to develop financial market, to develop products. Yeah, that's the new mandate. So to regulate and to supervise the new board, we take it very seriously that we have to strengthen the supervisions, the inspections in the financial industry, to the financial industry, and also to the profesi penunjang. Yeah. So first, of course, what we are currently doing is we build our organization so that we able to do the mandate, So we expand our organization in pasar modal, in capital market, because we think that 4 departments in capital market has been more than 11 years or maybe even more than 15 years, while number of emittents, number of listed companies, and number of products, number of reksadana, number of emittent, I think already increased twice, yeah, from 400 to 800 something, and number of reksadana maybe sudah more than 4,000 maybe, yeah. So we add 2 departments in capital markets in order for us to be able to supervise better securities companies, manajer investasi, investment management, profesi penunjang, and also emiten, the listed companies. And in the IKND, asuransi, pension funds, we add 1 department. And in order for us to be able to supervise better, especially insurance and pension funds. Because previously insurance and pension fund is under 1 department. But we know there are several cases that we need to expand our organization in order for us to be able to concentrate better, to supervise, to audit, to do on-site inspections. Yeah. And then customer protections. We add 1 department so that we able to supervise the market conduct of the financial industry. Yeah. Maybe previously the customer protections is not did not get enough attentions. So under the current period, we want to strengthen the role of customer protections. So in that regard, the topic today about the launching of SAK International is part of also OJK want to improve the financial reporting. So we support IAI, for on this launching for the SRK International. We at the board, we already discuss about this in OJK. We call it before one regulations launch or approved as a POJK. There is one step before the Rapat Dewan Komisioner is, we call it board seminar. So we already done the board seminars, and then for that we are going to, for the department in OJK to discuss with the public with regard to this SRK International. From OJK standpoint, every effort in order for this country to have better transparency, we will support. Yeah, because we are part of the G20 countries. Yeah, so that Indonesia must have international standard reporting. Yeah. But of course, performance, report is, standard is one thing. Yeah. Implementation is another thing. So implementation is very important. So please, we work together. Yeah, the accountant, IAI, also the listed companies, and the non-listed companies. Yeah, we work together so that the financial report actually the true situations of the company. Yeah. So again, because we want to improve, we want to strengthen the credibility of the financial reporting. We want to strengthen the credibility of Indonesia listed companies. So every effort, from standard body to improve the reporting and also the implementations, that's we will support. In OJK, in addition to, we are trying to improve the supervisions, inspections. The new initiative, we call it, is to strengthen the integrity of the financial system. Yeah, that's under Bu Sophie. Yeah, under Bu Sophie. Plus, we want to enforce basically the legal enforcement. So of course, in our side, we have to, in OJK side, we have to expand our organization, improve the quality of our supervisors, improve the quality of our penyidik. Yeah. But on the other hand, we OJK, we ask the profesi penunjang, please, we work together to improve governance of this country. And of course, profesi penunjang cannot work alone. Regulator cannot work alone. Yeah. The listed companies, the incoming listed companies, they have to understand there is a rule, there's a regulations that you have to comply. That's important part of this country if we want to be a developed country and our capital market to be strengthened and to get respect from international community. Of course, financial reporting is only one part. If we want to build our capital market, we want to build our economy. Yeah, there is maybe a lot of deregulations in others part of the economy, or the other segment of the financial industry, other segment of the real sectors. Yeah, if we want to grow our markets, if we want to grow our liquidity, yeah, our equity market liquidity, how to improve our equity market liquidity, yeah, compared to our neighbor countries, how to increase our MSCI weighting compared to other countries, Indonesia versus India. India is about 15% in the MSCI emerging countries. India is about 15%. Indonesia is about 3% in the emerging countries MSCI index. Yeah, so a lot to do, but this part SAK International is one of the important step for this country to improve the governance. So again, thank you for the IAI, and also thank you for Bursa Efek jadi tuan rumah. That represent the commitment from Bursa Efek to improve the governance of the listed companies in Indonesia. Thank you. Assalamualaikum warahmatullahi wabarakatuh.
Thank you, Bapak Mirza. Please remain on stage. For a token appreciation handover from IAI, we would like to kindly invite IAI President Bapak Ardan Adi Perdana for deliver token appreciation to Bapak Mirza. Bapak Ardan and Bapak Mirza, please remain on stage. Next, we would like to have a group picture. Now, I would like to kindly invite Ibu Sopiawati Mena, Bapak Profesor Mardiasmo, Profesor Antarka, Bapak Indra Wijaya, Bapak Iman Rahman, Bapak and Ibu IAI Council Member, IAI Supervisory Board Member, IAI Advisory Member, Bapak dan Ibu DSAK IAI, TISAK IAI, Bapak dan Ibu Direksi dan Komisaris SRO, Bapak dan Ibu Board of Director IAI to join our photo session. We would like to also Bapak Gatot Trihargo, Bapak dan Ibu VIP guests who joining us online, we would like to also your camera. We will do the screenshot from online. Okay. 1, 2, and 3. Now, Bapak and Ibu who joining us offline, we're ready for a group picture. 1, 2, 3. Sekali lagi Bapak dan Ibu, 1, 2, 3. Tangannya bisa dikepal Bapak dan Ibu ya. Ya. 1, 2, 3. Tangannya bisa gerakan IAI, Mbak Farah, bantu untuk dipraktekkan. Tapi jangan terlalu tinggi, jangan menutupi muka. Ya, bisa dicoba Bapak dan Ibu. 1, 2, 3. Sekali lagi, 1, 2, 3. Baik, beri tepuk tangan untuk kita semua. Terima kasih atas perkenannya Bapak dan Ibu. Kami persilahkan untuk kembali ke tempat duduk. Terima kasih kepada Bapak Mirza atas perkenannya menyampaikan keynote speech. Tanpa mengurangi rasa hormat, kami mempersilahkan Bapak Mirza dan Bapak Ogi untuk meninggalkan ruangan dan melanjutkan ke kegiatan yang telah dijadwalkan. Sekali lagi atas nama Ikatan Akuntan Indonesia, kami ucapkan terima kasih. Kita berikan tepuk tangan yang meriah Ibu dan Bapak sekalian. Terima kasih kepada Pak Mirza atas perkenannya. Ladies and gentlemen, the participant who joining IAI International Seminar online and offline, we would like to kindly inform you that all participants who join this seminar will entitled to get an e-certificate. You are required to join our survey and choose the right answer. The attendance list, the attendance link and the survey link will be provided at the end of the session. Ladies and gentlemen, let us start our session today.
online platform. Today, Anne will be covering 3 topics that we think might be interesting for you as well. First one is on the primary financial statements project. What is it? So as you know that the existing accounting standard is silent on or does not provide guidance on how should company present its P&L. What is operating profit? One company may define it differently from another companies. That's why comparability is not there. And because there is a lack of guidance, perhaps it leads to lack of discipline as well, particularly when companies are disclosing its non-GAAP measures or management performance measures. That's why, because this is one of the key projects that may significantly affect the way companies present its financial performance in the P&L. And we heard that IASB is going to finalize perhaps this year. And that's why we are keen to understand what are the updates on that project. That is for the first one. Second one, Anne will also provide us updates on IASB projects on BCUCC. You know, if company A and company B is part of holding company C, and company A is acquiring company B, then locally in Indonesia, we have a PSAK 38, right? Which govern how a company should account for that transaction. IFRS, as of now, does not have guidance on that. And IASB is making some project or whether or not they would like to issue separate standard for BCUCC. And in their proposal, some part of the proposal differ from our local requirements. That's why we are keen to understand whether this project will continue. And if so, what will be the direction of the projects? And if so, how it will affect the accounting treatment of companies in Indonesia. That's why I think it's also important updates for us to know. Lastly, last but not least, of course, Anne will provide us updates on digital financial reporting, how financial reporting may facilitate better communication of financial information through technology. Of course, this is traditionally out scope of accounting standard setting, but we are keen to understand how both of them correlates one to another. So I think without further ado, I'll pass on the microphone to Anne to start her presentation. And of course, you are encouraged to ask questions during the sessions. Thank you. And over to you, Anne.
Thank you, Indra, and hello, everybody. It's a great pleasure to be here on this very exciting day in the Stock Exchange in Jakarta. So I thank the IAI for the invitation, and I thank you all for being here in present and online. And it's great to be able to talk to you about these 3 very topical issues for us. So starting with primary financial statements, slides coming back now. And I'll just start my timer as well, Indra, because, you know, people have got lives besides accounting. So first up, primary financial statements. Important project for us. Next slide. Oh, I'm also moving slides. Can someone move slides for me, or do I need to do it? So I'll just say move. Thank you. I'll just say move slide. Thank you. That will really help me. Then I'm only jiggling less things. Thank you. Right, project. Very important project for us because it'll affect the presentation of the profit and loss statement for all companies that use IFRS. A lot of interest in the project and a lot of interest from users, so investors, very keen to see this project and see the changes in the income statement that will follow, and I'll present those. So Indra referred to where we're up to 2023. We're discussing the feedback from some additional outreach we did. So a major outreach with an exposure draft. And then we discussed all that feedback, made some changes and did some additional outreach. We're discussing that now and completing our deliberations in 2023. So main proposals within this project, you can see on the slide there. 1, 2, 3, the objective of the project to improve communication through the financial statements, which is so important to everyone. This project scope is focused on profit and loss, not on the other statements. And three main areas. One, creating these defined subtotals. Secondly, information about non-GAAP, which we're calling specifically management performance measures. And thirdly, more guidance on disaggregation. So next slide, please. I'm going to talk about each of those three areas in turn. This is a picture for you, and you can see the three categories. So operating, investing, and financing. They're categories of income and expense. The categories as such don't appear and won't appear in people's financial statements. It's just for us to talk to you about them and for people to understand the standard. So as we look at this slide, it is just an example. It's not a template, and the line items you can see are not new mandatory line items. Companies are going to report as per their business operations, but there will be specified subtotals and operating profit. People might call it something different, but the idea of operating profit will be a specified subtotal, as will the one in red. We'll talk about that in a minute. And then profit before financing and income tax. So the actual words are not specified, but what is to go in each of the categories is specified so that there will be more comparability in financial reporting. So next slide, please. Okay, operating category, that was the one at the top. It's a default category. So we've worked hard to define what goes in investing and what goes in financing, and then this one is default. Some stakeholders wanted us to define operating, and we would have if we could have, but we couldn't, so we don't. It's too difficult to define operating for the diverse universe of companies. So it's a default category, but it needs everything that's not in investing or financing, everything. So there won't be any taking out of unusual or taking out of volatile, so that investors and users can understand what is in each category and what subtotals will be comparable now. So next slide, please. So investing, it's really important that we got a working definition of investing, and you can see it on the second red point there. So there's a working definition that you'll need to work with: income and expenses from assets that generate a return individually and largely independently. So that was what we were working for the investing category. We've also specified that that's where the income and expenses from associates and joint ventures will go. It will sit in there. Now, there's been a lot of discussion on that because there are some people that would argue that it needs to be in operating, but if you have a look at our most recent board meeting, we discussed this at length, and we've arrived at what we believe is the best decision for everybody, to not have an exception here. So that's where you'll find those as well. Next slide, please. Third category, financing. And here we want income and expenses from liabilities that involve only raising of finance. So what do we mean for raising of finance? Where, a typical loan contract involves only receipt of cash and return of cash. We're trying to have that sort of concept that you can use for raising of finance. We've also specified that interest expense and changes of effects of interest rates in other liabilities will go in there as well in financing. So the overarching idea is separating financing, and then separating income from investments, and then having operating income at the top. That's the basic idea and basic presentation. We're also using a concept called main business activities. So if an entity had the main business activities that were all about financing, they would then move items from the financing category and the investing category up into operating. And taking that approach is how it's going to work for a range of different entities. So same approach, But if you've got main business activities and say, for example, a bank, well, then you won't be showing financing because the relevant items will be raised up on the basis of the concept of main business activities. Okay. Next slide, please. So I've got 3 things to talk about. That was the first one. Second one, I'd like to talk about management performance measures. Just see how we're going time-wise. Sorry. 7. So management performance measures. Great. Thank you. What are management performance measures? We actually have a definition of them, which is really important. So we define them so people know what our requirements will relate to. And we had to define them quite narrowly, really, because otherwise the universe here can be very large. Entities can present all sorts of things as their non-GAAP reporting, or some regulators refer to them as alternative performance measures. Now, MPMs here, we mean something very specific. So we're not talking about non-financial measures, which are very important, but we're not talking about them. And we're not talking about there are some sorts of non-GAAP measures such as free cash flow that are very common in some industries. We're not talking about the ones that relate to balance sheet things. We're just talking about for the profit and loss statement. So you can see in the red box there, adjusted profit or loss. An entity presenting adjusted profit and loss will reconcile it to an IFRS subtotal. Someone that's presenting an adjusted operating profit or an adjusted EBITDA, that will reconcile to the closest IFRS specified subtotal. So we have created these IFRS specified subtotals, and then there'll be a reconciliation. This is for clarity. This is for transparency. This is to help the users understand what it is the entities are doing when they're creating these management performance measures. So we have a thing called specified subtotals, and there's some examples there. Operating profit will be one of those. Next slide, please. With this approach, it's really important that we define what we mean by a management performance measure, and we've decided to define it by focusing on something that the entity uses in public communication outside the financial statements. We've had to consider closely whether that would extend as far into the social media world as social media posts and transcripts of oral communications. And we have excluded those just for practical considerations, just to make it not too onerous for companies. So we're saying that these MPMs are something that communicates management's view, so management's view, and it's management's view of the entities and the whole entity financial performance. And we're hoping that that is going to be very workable for people. We've consulted about this a lot, and we've had quite good feedback in this area. So we've also had to include a rebuttable presumption because some regulators have requirements around things that the management must present. But we're working with everyone will work with the assumption that the rebuttable presumption is these are the entity's view of things. They're not defined by IFRS. They're not, we don't tell people to do management performance measures. We don't tell them how to construct them. But we're aware there are some jurisdictions where a regulator specifies a type of measure. So we've got that rebuttable presumption for that case, which may not apply in your setting. Next slide, please. So the key thing about MPMs is requiring a disclosure within the audited financial statements, and people may choose to make that note 1 or note 2 right up the front, and it'll have certain elements and components to that disclosure. Firstly, the reconciliation. So the reconciliation will go from the MPM that the entity presents to a specified subtotal. It'll explain why the entity considers that an MPM explains management's view. What is it that the entity is trying to communicate with their MPM. It'll be very important that the entity makes clear that their MPM is really comparable with another entity's MPM, because they're defining it themselves. It's an entity-defined measure, not an IFRS-defined measure. And if the calculation changes over time, that also needs to be disclosed, because we know that users like a time series of data. They're working with the assumption that things are comparable from one period to the next. If the entity is going to change this self-constructed measure, that needs to be communicated as well. I'll give you an example. We'll talk about that. So next slide, please. I apologize for all the words. Just focus on the top part. The word, I'll explain why the word's there in a minute, but just focus on the top part. There's adjusted operating profit. That would be the MPM. That would reconcile to the operating profit, the specified subtotal. So think back to the first slide we looked at with the 3 categories on your right. And we nominated the first subtotal as the operating profit subtotal. So I'll just use that naming for convenience. An entity can adjust that naming. It can't adjust what's in there, what each category has to be as we direct it, but there's flexibility for naming. There is also flexibility to add additional subtotals in the same way people do that under the accounting standards now. But we've got some guidance that I'll talk about in a minute. It's really important that what is presented is understandable. If an entity wants to present the MPMs within that profit and loss structure, it has to fit the structure. It has to go, those categories have to be as we have defined them. And that's important to get the comparability. So here's the reconciliation where the entity has some restructuring expenses, and it also makes an adjustment on revenue because in its opinion, this is useful information, this entity-specific measure. So they present the adjusted operating profit. In our requirements, we also require that tax and non-controlling interest are broken out. So part of the MPM disclosure will include the tax for that item and the non-controlling interest for that item. We do that so that users can adjust, because sometimes the users, the investors, don't agree with the management view and they want to add something back. Now, in order to put that into their analysis, they need these extra figures. That requirement has generated a lot of discussion from preparers who say that it's onerous. How can we get this tax? And that's why there's the text up there explaining, and you can see it in our detailed materials. But what we're saying, we've given guidance on how they might determine what the applicable tax is. And we've said that we understand it may not be exact, but it's the best that they can get in that situation. We believe, board believes, it's better to have that than to leave it as nothing. On the other side, on your left, the other detail box is what we're talking about when we say there are specified subtotals. And the reason we're doing this is because if companies commonly use a subtotal, such as gross profit, we don't want to turn gross profit into an MPM. So companies can continue to present a gross profit up there within the operating category. They can continue to do that, but they need to get down to an operating profit subtotal. And gross profit doesn't become an MPM. So that's the reason we've done those specified subtotals. I know it gets detailed and complicated, but this is designing something that will work for a range of entities in a range of jurisdictions. Okay, next slide, please. And the third area that I'd like to talk about is disaggregation. How am I going for time, Indra? We have to move on a little bit more. Yeah, so disaggregation. Because this is a presentation standard, it's about presentation, it's not changing recognition and measurement. That will come from all the other existing standards, but it's to help people and give more guidance And so we have some general requirements in this new standard with some specified line items. We have some specific requirements. So starting first with the blue boxes, some general requirements, some more information about the role of the financial statements and the role of the notes. And that's guidance to help people when they're preparing and auditing and regulating. We've got principles for what should be aggregated and disaggregated. Something we've heard a lot from investors is that there can sometimes be too much aggregation. They can't find the things they're looking for. Think about the other expenses category when it's too big. So principles to help people know how to approach aggregation and disaggregation. It's based on the idea of dissimilar items. We're talking about that box there, aggregating items and using meaningful labels, guidance on what can be aggregated and guidance on the labels. So getting away from using this other expenses with a big mix of items in there. There are specified line items in the current standard, which some of you will know as IAS 1. There are some specified line items and they come out of other standards and they stay in place. So the existing sets of specified line items have not been touched. There have been a couple added. And then we're also adding some very specific things. These are in the red box and they are depreciation, amortization, employee benefits, impairments, and write-down of inventory. They become specified line items in this project and all entities will disclose them, and they will disclose them whether they're using a by function presentation or a by nature presentation. So currently entities make that choice. Indeed, some of them use what we'd call a mixed presentation, some element of function, some element of nature. That will be permitted counter to the ED, the exposure draft. We've changed based on feedback, so entities can continue if they need to, if they have to have a mixed presentation. So back to these specified, the 5 items. Let's talk about them a bit more. Next slide, please. I think I've said enough on this one. Let's go to the next slide. In the exposure draft, we had proposals about disaggregating by nature anything that was by function. So when people had a cost of goods sold presentation and they're grouping things together, they would break that up in the notes. The preparers, stakeholders said that that would be a big ask. It would require system changes and it would delay the project by years. And we have listened and we believe it's a genuine response. So we've modified our position. And now we just require the specific disclosures on the 5 items that I've named. Many stakeholders, many preparers have said their systems will already do that. They collect that information. Because remember, we have to think not just of the single entity, we have to think of large consolidated entities that are bringing in information from jurisdictions all around the world. And accounting systems have all those levels. So the information might be available at the base level in the subsidiary, but as it comes up into the consolidation pack, information gets lost. So they just couldn't give that massive breakdown. Some of them didn't want to do the big breakdown for reasons of commercial sensitivity or reasons of litigation risk. So we have a compromise here, and we'll have those 5 items. Investors have assured us that they are the items they're looking for, the breakout. So we will have that. One more complicated slide, and then we'll leave this section. So next slide, please. Now, I apologize for the big complicated slide. All we're trying to illustrate here in this example is this breakdown. So if you look at depreciation up the top there at 175 whatevers, an entity that's putting a by function presentation will have that in a number of places. Could be in cost of goods sold, could be in general and admin expenses, could be in R&D, in research and development. And what this proposal is, what will be in the standard, is a requirement that in a note, there will be this breakup so that investors will have better information for decision making, more information than is currently provided in a by function presentation. So in the demonstrated example, you can see depreciation broken up, amortization is only in one place, employee benefits is broken up, impairments are, and the write down, so the 5 items. Where the complication comes is that for some of these items, some of it goes straight over to the balance sheet. If we think about depreciation, it writes down fixed assets. If we think about other things, they're going into inventory. So we're giving some guidance on how to present that in the notes, and we're explaining that we need the breakup, but we recognize that some people will be putting some things into the balance sheet because that's the nature of that particular item. So we'll give you guidance in the standard, we'll give you examples in the standard, and we're hoping that people will be able to take that on board and provide that information. Final slide for this section is on cash flow. So next slide, please. Very, very limited changes to the cash flow statement because the IASB has taken on cash flow as a project to be started in our next round of new projects. So very limited changes, specifying that the operating profit or loss subtotal, the new specified subtotal, is the starting point if you're using the indirect method. And then more specificity about where items will appear. So dividends received and interest received in investing, dividends paid, interest paid in financing. So a principle for everyone to follow. And then if you've got main business activities which make you different, you can move them up. You can move them around. They just have to be all in the same place. So let's say you're in banking and you want that interest received to go up in operating, that's fine, it can go there, but it's all going to go there. So based on main business activities, people will have to look at the profit and loss statement and understand the business to understand what they're looking at, but the concepts will be the same for everybody. And the concept here will be main business activity means that some things have moved from investing and financing and gone up into operating. Okay, I'm going to pause there, Indra, and see if there's any questions people would like to make.
Thanks, Anne. So I think I'll ask the team, is there any questions from the audience? Can you show it on screen, if any? Yes, one question. Okay, so let's wait for that, Anne. And for you joining online, so please use the Q&A or chat function if you would like to have some questions. Coming up, okay. So there's a question. I think it's about the interrelation between the proposal, PFS proposal, and what about specific regulation in jurisdiction. Let's say the regulator is already specifying certain line items, which might be different from the outcome if they apply this proposal. So what is your opinion or view on that?
We'd like to hear from you. So get in touch with me directly or get in touch with Indra and he will get in touch with me and we'll put you in touch with the primary financial statements team. So this team is really keen to be talking with regulators already to work out how to approach this and deal with this. We're aware that some jurisdictions have templates that regulators have, and they're used to them and they have been using them. So the staff is ready and available to be talking to regulators and working with regulators and coming to a good solution for how to move the template-based reporting more towards IFRS-based reporting, because that's about comparability. We appreciate that some people are used to their templates and their stakeholders are used to the templates as well. But as we step up from national templates into international comparability, the more that we get the companies to be comparable with their subtotals to be comparable, the better it is for the investing world. For a couple of reasons, because a lot of those subtotals will now appear in the databases, and people that screen the companies based on those subtotals of the databases we need them to be comparable so that they're getting good information in their screening or in their analysis.
Yeah. If I may, I would like to add a bit on this one. So if I understand correctly in your presentation, you highlight the differentiation or the importance between the primary statements and in the notes.
Yes.
So, and if we link it to the fact that regulators may have prescribed or specified certain disclosures, and how do you think this may align with the project? Meaning that if one of the concerns leading up to this project is on disclosures overload, something like that, how does that fit into this project? Because you mentioned earlier, this is the role of the primary financial statements, this is the role of the notes, and there is concern on over disclosures on the note just because they have to follow this prescribed disclosure, for example. How do you view that? And well, whether this new project may somehow change or influence the way people disclose something, no longer based on checklists, just because it is specified, but considering impact of materiality and so on.
So we're really hoping this project will get everybody to look at what they're presenting and disclosing and look and reevaluate it and make new decisions, particularly with the materiality lens. Because people that have coming from a checklist-based approach haven't necessarily had to think about materiality. Some do, but a checklist-based approach or a template makes you provide all that information, material or not. And here, this project will really encourage people to think about materiality and what needs to be provided. And we hope encourage people to recognize the basic principle here that is that if it isn't material, you don't have to disclose it. It's mentioned in the standard, but overarching every standard, if it's not material, it's not required to have disclosure. And so as people think about what needs to be on the face, they're going to think about an understandable overview. And what I'm presenting, does that give an understandable overview for entities? And then the notes will give additional detail. But again, the notes should focus in on what's material. And remember, if additional information is needed because it's material, that is permitted. It's currently permitted. It'll go on being permitted. If there's some particular information that needs to be disclosed because it's material or because it's a regulator requirement, it will be permitted.
Okay, so hoping that this new project may encourage that.
Yes, yes.
Okay.
Hoping.
Is there any other question? If no other question, perhaps I can ask you one question more. So you mentioned earlier about the connectivity between this project and the cash flow statement, because this focus on profit or loss.
Yes.
Why don't the board expand this project to have a fully aligned P&L and cash flows? Because the categorization seems to be pretty much similar to what we had in cash flows, right? You have operating category, investing and financing. Why don't the board just expand this project so that we will have a fully aligned primary financial statements comprising of P&L and cash flow statements?
Yeah. I think the answer to that is the difficulties that the board encountered back in 2010 when it worked on a project with the FASB, the US standard setter. And that one was called Financial Statement Presentation. And it had this fabulous approach of alignment across, because some people are very keen on seeing that alignment across the three primary statements. But for various reasons, that was not something that could be operationalized and accepted by the communities. So as a result, the IASB decided to focus just on one statement. So it's a practical compromise to what the market could deal with.
Okay, but perhaps in the future there might be projects.
Yes, well, cash flow statements is coming up as a project. So the questions are going to come up again, because as you rightly identify, these categories are the same categories. They don't have the same definitions or content, but the categories are being used. So it'll come up again as discussion point.
Okay, thanks, Anne. So no other questions as of now? Because no other question, I think I'll suggest to move to the next topic on BCUCC. Over to you, Anne.
Thank you. Next slides, please. We're going to BCUCT. And Indra, if you just watch my time, because I'm not having much success watching my time. It's turning off on me. So the second topic I'd like to talk to you about today is business combinations under common control. And Indra explained in his introduction that this is something that's very prevalent in Indonesia, and you have your own accounting standard that guides the accounting in this area. So let's talk about what the IASB has been doing. So next slide, please. So this is just an example to illustrate the type of business combination that is already has an accounting standard, where parent number 1 acquires entity C from parent number 2. And the business combination accounting, the acquisition method accounting will apply. Compare that with the diagram on the right-hand side as you look at the screen, and there is no guidance within IFRS accounting standards in the sense of a specific standard. There isn't a specific standard. So the parent entity might be using the acquisition method, following from acquisition method accounting, or the parent might be using a different method, such as a book value method. And I understand that book value methods widely used in Indonesia, so that's something you're very familiar with. And those of you who are working with any IFRS reporters under the business combination standard would know the acquisition method as well. So next slide, please. So we did the project because of the business combinations not being addressed in the business combination standard. So business combinations under common control were not addressed. The objective of the project was, could we create an accounting standard which would make the receiving entities financial statements have better information that is more relevant and more comparable. So that was our objective. So in standard setting, we always look for what the problem was. Well, the problem was a gap in the standards. And then if we want to address that gap, we should be aiming to provide guidance, provide an accounting standard that directs the production of information to be more relevant and more comparable. Next slide, please. Some of you working in this area will be familiar. This slide just summarizes under an acquisition method what technical accounting we're doing compared with a book value method, how the technical accounting works. So just looking at the first line, for example, the measurement of the assets and liabilities under the acquisition method, they are measured at fair value at the transaction date, whereas under a book value method, some version of book value is used to measure those assets and liabilities. So they might be carrying in from the transferor company. And Idris explained to me that the accounting you're currently using in this area, the transferor and the transferee are using the same asset and liability values. So some more notes there about what goes on. I think the bottom line is quite important. When you have an accounting standard, you get comprehensive disclosure requirements compared to when you don't have that accounting standard specifying disclosures. It may be the case that users don't have sufficient information, can't understand the combinations that are happening. Next slide, please. So what did we do? Next slide. We released a discussion paper, and in the discussion paper, we outlined how we could approach this project, and we got lots of really useful feedback. So we thank you for that. We know it takes a lot of time to put your feedback in, and we appreciate it. So the discussion paper focused in on the transfer of a business that's under common control. It focused in on the receiving entity, so that's entity A in the diagram, and it focused in on consolidated financial statements. So company C goes across and becomes part of company A, the group with company A, and company A, the receiving entity. Next slide, please. So in our discussion paper, here were our preliminary our preliminary views, and then we received lots and lots of feedback. So I'll tell you what our preliminary views are. I'll give you comments on the feedback that we got, and then I'll talk to you about the way ahead, what we should do now. And this is where we need feedback from yourselves, from stakeholders, from people who are involved. We need feedback on which way forward, because really we've reached a bit of an impasse here on this. So here we have our plan. We'd worked it up, done a lot of work, very good technical team, and here's where we got to. This is the proposal. The question is, can we mandate a single method in all cases? So that is all acquisition method or all book value method? And most people said no. No, given the nature of a business combination under common control, it's not appropriate to mandate acquisition method for all, nor is it appropriate to make it book value method for all. The problem is where you put the line, where you draw the line, and that's where the diversity comes in, because there are some jurisdictions, some entities, some people much more keen on the acquisition method and the information that that provides. Others very comfortable with the book value method they're using, and they don't want, for this setting, for this scenario, they don't want more acquisition method or all acquisition method. So this how to draw the line becomes difficult. And what we proposed here for the discussion paper was that if there were any non-controlling shareholders involved, then the acquisition method would be used, basically. And everything else would use the book value method, recognizing the special nature of business combination under control. So basic idea was acquisition method wherever there are non-controlling shareholders. There was an exception and there was an exemption within that, because as we know, things start with principle, but dealing with the reality is complicated. So we did have some tweaks on that. So that was the exemption and the exception to recognize the cost benefit in here. And then finally, book value to all other cases. So that's what we went. Now, feedback. Let me see if the... All right. Next slide, please. This is just a pictorial example of where the acquisition method would apply. And on your top right, you can see the pale blue box with the non-controlling shareholders having 50% of the hold company. So in that scenario, when e-retail comes across, that is where the acquisition method would get used. Next slide, please. So what did we hear? Oh, are we still on preliminary views? Oh, I think we've got that. Oh, I see. I'm going to talk about preliminary feedback. Okay, so to the first, that neither method should apply in all cases. Most respondents agreed with that, neither method. However, there's diversity in the user feedback. So we're very careful to collect feedback from the users of the financial statements, and the user feedback showed great diversity, because while some users agreed with that, there was a significant group of users who said, no, we actually want book value for everything. So even on item 1, we find ourselves in a difficult situation. When there is user, we often get diversity between the views of the preparers, the auditors, the regulators, and the users. But if you go within the user group and there is diversity, it doesn't give a clear way ahead. So that was our first problem. Next problem is the red box. Many did agree, many respondents did agree for the acquisition method when there was a non-controlling shareholder. But, you know, even within there, some would say, oh, yes, but, and they'd come to the but. What if the non-controlling shareholder is insignificant? Well, then we'll have book value. And as soon as you start layering in more and more judgments in your application of the standard, makes more complex. There are entities, countries, and jurisdictions with very strong views that it should be the book value method for all. And that makes it very hard. It's particularly does not fit with the preliminary views that we exposed, but there is a strongly held view in some places that in this area, book value for all. So when we talk about what was the standard setting problem, we thought there was a standard setting problem because there was a gap in the literature. We thought there was a problem because there was diversity in the accounting. And we thought there was a problem that there wasn't enough information. People didn't have transparency, so they couldn't compare like for like. So in addition, people said it should depend on the substance of the transaction. It should be the decision made about the method should reflect the substance of the transaction. And that's good in theory, but very difficult in practice, because how do we define substance of the transaction in a way that can be operationalized in 144 countries? That's a challenge. And then still others said that the receiving entity should have a policy choice. A policy choice, because the receiving entity knows the situation and the receiving entity can decide whether there should be information for those non-controlling shareholders using the acquisition method, or the receiving entity can decide whether their investors, their users really want book value method. They have a strong preference for book value. Yes, it's possible we could do it that way, but then that would not do anything about removing the diversity that exists. If we do the policy choice. If we do policy choice with disclosure, then it might do something about the lack of transparency, but it wouldn't do something about the diversity. So you can see, you get a flavor of where we go. And as I've already said, it was very important that we got this user feedback that was very diverse. Okay, next slide, please. I think we've got just one or two more. So this is just detail on, is that my next slide? This is just detail on how we'd work with an acquisition method. It would be generally the method of IFRS 3, business combinations. We'd have a little bit of difference around a contribution being a bargain purchase, and there would be disclosures, and that'd be largely the type of disclosures people are familiar with for the acquisition method now. So next slide, please. Applying a book value method. This is how we were thinking about it, but if you're familiar with that the discussion paper, we did not go into detail on how a book value method would work. And in reality, there are a number of variables around the book value method, and they haven't been agreed. So when people say they prefer a book value method, they probably mean they prefer the book value method they're currently using with its features, whereas other people prefer a book value method that's got different features. And those different features are around things like whether it's actually the receiving entity or it's the values in the controlling party. So the controlling party's book values that gets used, or the diversity is also around pre-combination information. What is going to be required from pre-combination information? Anything? Nothing? So there are still, for anyone wanting to use a book value method, the question then becomes, if there was a standard, how specific would the standard be on all the requirements of book value method? So next slide, please. Project direction. Next slide, please. Right. I think we now have 2 to go. Yes. 2 to go. 3 to go. Okay. We're discussing this now with stakeholders. So now's the time to have input and tell us which way forward. I'll give the choices in a minute, but please, we're really seeking feedback, which way forward. A lot of time and resources have gone into this from our side, but also from your side, giving us feedback, giving us guidance, informing us on how it's working in practice. And now we have to decide. So consultation right now with stakeholders and decision in Q3, which is really just around the corner. So decision time. Next slide, please. Okay, here are the choices. I won't ask. I could, for fun, we could have a show of hands, but you might not want to vote. You might not feel that you've had time to evaluate. But these are the choices. keep on going how we're going with this, what I've outlined at the beginning of my comments, what was in the discussion paper, keep on going with that, drawing the line, acquisition method for some, book value for others. That would take time and resources, that kind of project. And we're just not sure whether it will address what we've identified as the objectives. Disclosure only, we could go for a project that doesn't change. People continue recognition and measurement as they are currently, and we just address disclosure to try and improve the information that's available. Thirdly, what those words are is code for the do nothing option. So no recognition, measurement, or disclosure. That would just be stopping the project. Next slide, please. All right. So one of the things that will help us decide, the IASB, is your feedback, but we'll also give attention to our due process, because that's what IFRS does. We work based on a due process so everyone can see how we're making decisions and we can be fair and equitable as best we can. So the first 4 boxes are about user information needs, and the 5th box is about the IASB resources, which we must spend very carefully, same as everybody. So if we go on with this project, would we address a deficiency in reporting? So this is these basic ideas of reducing diversity and improving transparency. How important to users is it that we go on with this project? Because there are some situations where there is diversity in practice and the users don't require us to do a project. They say, no, we're managing, we're getting the information, we're okay. Don't go and do work on something else we want you to work on. 3rd box there, what sort of entities, how prevalent is this? What sort of entities are affected? And our information tells us it's very different by country. And then how pervasive or acute is the problem? So some of the feedback seems to indicate that there aren't many, there's not many non-controlling shareholders that are affected, that most of the business combinations are about within the group. So they're the things we consider in trying to make our decision. And the 5th one, to be wise with the resources that we're given, that's time, that's money, that's the stakeholder resources. If we continue with this project and we produce an ED, we'll be coming back to you and asking for your time to evaluate the proposal, because this will be a standard that is mandatory for everybody. So we'll be going back to stakeholders. We need your comments again on this project. And if people have a view that the project really isn't needed because they're happy with what they're getting now with book value method, that they're the type of things we consider. So 3 options, please let us know your views. I won't ask you to vote, but you can see they're quite different options. And we've got very mixed evidence to date that we're trying to bring in to our decision making. So I'll stop there, Indra.
Thank you. And so I think you provide us with a very great clue so that we can provide you feedbacks on this project moving forward. Are there any questions? Yeah, okay, can you show the questions from the audience? Okay, so this is the $1 million question. So what do you think the direction of the BCUCC project? Yeah.
I'm smirking or I'm smiling because the board members are really confronted with a difficult decision. So where do I think it's going? I don't know. I don't know. Staff are really good, super staff. They are really dedicated to getting the information and presenting us with really good information. And they've started doing that. And they're saying, they're not asking us what our view is yet. They're asking us to think about the 3 options, and they've told us that they will go out to stakeholders. So that means they're happy for any direct contact if you've got information on this topic. They're also going to the various consultative groups. So the consultative groups are things like going to ASAF, which is the standard set of consultative group, and Indonesian views filter through that through AOSSG, and we get presentation from OSSG and they don't name people, but everyone's views are presented. So we will hear that feedback that way. But I do encourage you to speak to your IAI people and your standard setters and feedback to us, because the team really want to know which direction it is heading. It can go any of the three ways, because there are some stakeholders such as regulators who really want the gap filled. There are some people that they want to stay with their choice, which means, stay with where they are now. But to go for this choice project means you don't do anything about diversity, you just do something about disclosure. So to go for that choice, board members would have to be convinced that we could contribute, that our spending our time and your time on disclosure requirements will significantly improve information investors get. So that's why the questions are around things like the acuteness of the problem. Is it hard to make decisions currently? You've got companies that are doing this and investors can't see what's going on. Well, then the feedback would be do the disclosure. So at least they stay with that method, but we can see it better. But if we don't get feedback about prevalence or acuteness, well, maybe the answer is to not continue because nobody's demanding a change.
Okay, so I would like to pick up on things that you highlight. So because you mentioned that the project originally came from concerns from regulators, right? What about their views on this one, knowing that there are diversity in views of what users' information need on this one? Will that be the determining factor for the board to decide moving forward on this project, or they're just one constituent and not the determining factor on how to move forward with this project?
So when we say regulators approach this, of course, regulators are largely national based. There are some super national regulatory forums, but regulators are nationally based usually. And so they're talking about their jurisdiction. And then it's our job to consider all the jurisdictions. So in the same way as regulators are an important, very important stakeholder in the piece in the puzzle, they are only one of several. So when we talk about the mission of the IFRS Foundation or the objectives of financial reporting and the objectives for the financial statements, we talk about decision useful information. So that's where we're constantly referring to the users of the information. So a lot of us think about the investors, but regulators are part of that as well. So to answer the second part of your question, would we only consider what the users are saying? I think the answer is no, that we consider in the same way users could ask for some information that preparers say they can't provide. And I gave you an example in primary financial statements where some users are very, very keen for a full by nature disaggregation of a by function income statement. But we've gone with compromise because preparers said, if you do that, you'll impose a lot of cost and a lot of delay. So make your choice, standard setters. So again, in this setting, we will listen and we'll have more conversations with regulators to try and identify the nature of the problem, more details on the problem that they're facing that's led them to be keen to see this project. But it's not just regulators. We heard quite recently in an EEG meeting, Emerging Economies group that Indonesia participates in, and these are public meetings. I'm not speaking out of turn here. You can hear in this particular meeting where one country said, "Oh, we've already put in what you've proposed in the discussion paper is already into a national standard for us. This is so important, and we're so keen to have both the acquisition method, the clarity around how to use the acquisition method, more clarity around the book value method." So they're a jurisdiction that we're very keen to see this go ahead. So, and then on the other end, we would have more than one jurisdiction that's very keen to not see it go ahead. So yeah.
Okay. So is there any other questions? One more. Okay. Let's see. Okay. in the case that NCI is not affected, how about goodwill recorded in the book of the previous parent? Can the new parent record the carrying amount of goodwill recorded in the previous parent?
No. Under that previous proposal that we had, it's the receiving entity. It's the receiving entity that looks at the transactions. And even though you say there's NCI is not affected, so they're using some version of book value accounting, but under our proposal, it's the transaction for the receiving entity.
Yeah, I guess that's the difference between what we had in the local standard, because your proposal is focusing only on the receiving entity, while this question seems to coming from background of having receiving and the transferring entity, the same accounting treatment for that. Okay, so if I may have one other question. So it seems that one of the options is to go only with the disclosures. And I think we've recently see some other projects go into that direction. So there are complications on the recognition and measurement, and then you go into disclosure. Will that be the new approach that IASB will use moving forward? Because it seems that some project leads to that conclusion.
Yeah.
Or is it relating to the statement that this will be a maintenance era, so that you will not issue lots new standards on recognition and measurement?
Can you tell me what projects you're thinking about that have gone that way?
Let's say recently on the supplier finance, then it's on disclosures, right? Something like that. Although this is not a big project, but
yeah, okay. Because I can think of about three.
Okay.
And I just wondered what was of topical interest. So supplier finance. Yes, supplier finance was and it's current, it's coming out, it's done, and it is disclosure, just additional disclosures in relation to the standard on the cash flow statement. That was narrow scope in response to current market needs, demand for information, because if we get involved in bigger projects, they take longer. So that was one approach to wanting to be quite timely. I thought you might have mentioned the financial instruments with the characteristics of equity. Those of you who are interested in financial instrument accounting and involved in that area, we had a major discussion paper with major proposals to try and deal with the debt equity distinction, which is now a disclosure only type response. And that's responding to feedback where stakeholders have told us, oh, actually, we've decided now that the standard's not broken, just fix the disclosures up. So it's a lot about the feedback we get. If we get significant feedback on this that says we do want the full project, not the disclosure only, but the full project. But yeah, so to answer your question, there is no new trend that is just to do disclosure only, and disclosure does not substitute for inadequate recognition and measurement. Yeah.
Okay, great. Okay, I think let's move to the last topic today on digital financial reporting. So please, Anne.
How much time have I got?
Around 10 minutes.
Okay. Final topic I'd like to touch on, and you're doing very well. I know it's been a long session, and this will either send you right to sleep or get you very excited. This digital, especially that slide. Okay, so the first slide here, why it's important, why are we talking about it? Why have I been invited to give you a few comments on digital? Just because of the growth, the massive growth in the digital consumption of information. I understand you're already familiar with a taxonomy, an XBRL taxonomy, in fact, that handles tax information. Is that correct? Yeah. And so there's also taxonomies that handle financial information. So IFRS accounting standards have an IFRS taxonomy. ISSB, the sustainability standards, will have a sustainability taxonomy, so that entities that are providing financial statements for IFRS based on full IFRS can tag all their financial statements using the IFRS taxonomy. And I know that I've heard at least one Indonesian company that's cross-listed on the NYSE, so they will be tagging, if they're using full IFRS, they'll be tagging with the IFRS taxonomy. The idea of digital reporting is just responding to what we're living with every day, the demand for information and the use of technology combined together, very powerful. So more and more information is becoming available electronically with digital information. The most recent widespread use was with the European Union, which you know is a long-standing adopter of IFRS accounting standards. They have mandated the use of digital reporting. And so from 2023, all their IFRS reporters are also digital reporting. So there's a big, there's demand and there's increasing in supply. So the idea that machine readable reports can promote efficiency and speed. People can collect information much more quickly. They can analyze it. They have more accuracy in there, assuming accurate tagging. So on balance, people are getting involved in digital because they want to improve capital market efficiency and they want to reduce cost of capital. Next slide, please. All right, this is the mind-blowing slide. Let's just look at the 3 red boxes. So when information is tagged, it can be searched. So analysts have very powerful search tools that they can apply when the information has been tagged and is in some sort of digital database. They can export, so they can easily extract information. During my visit, I was describing what I did with Indonesian financial statements, manually collecting policy choice way back. And some of the people I was speaking with were talking about now for students extracting information and using electronic databases, speed and the accuracy is very much enhanced compared to a manual process. So that, and then also tracing. The way XBRL works and the way the taxonomies work, you can go back behind the information and find the source document. This example is from a data provider called CalcBench, and you can hover over numbers there's a type of financial reporting called iXBRL, and you can hover over the document. So it's a human readable document, but you hover over and it takes you behind and you can see the tagging that went on. So all sorts of tools that are being made useful. And this is just one particular example. Next slide, please. So this is when we tag something in the IFRS financial statements, you'll recognize blue books over on the left. What an entity would do, they would do it themselves or they'd employ an agent to do it for them. All the pieces of information, every line item gets tagged according to the IFRS taxonomy. And so it's digitalized, if you will. And then you can get the digital consumption. So the investor would apply software to the database where all the data is held and extract the information they want. In the US example, the SEC requires tagging of the financial statements. They make all that data available through a database called EDGAR. The investor would apply a tool to EDGAR and extract and then manipulate data and take out what they want. Next slide, please. Okay, I think that's just more of the same. Next slide, please. Okay, IFRS accounting taxonomy. It's been around for many years, but it's just now we're paying more attention to it as a result of our agenda consultation. Our stakeholders said, could you spend a little bit more time there? Our IFRS accounting taxonomy is based just on the disclosures in the accounting standards. So whatever is a required disclosure in an accounting standard or appearing in an example, in an illustrated example, will get tagged and appear in the taxonomy. We do something else called common reporting practice. So our staff look at commonly reported, commonly used. So up until now, there hasn't been something called operating profit, but you can find the label operating profit in our taxonomy because it's commonly used and it's got a tag. Okay, next slide, please. And this is we're probably getting to the end. We've probably got 2 more after this. But this is the important one. If you will have a look on your right-hand side, the multicolored boxes. So IFRS accounting standards are well recognized, used in many countries around the world. And we've had the exciting news today that looking forward to entities in Indonesia making use of full IFRS accounting standards. They can also use the IFRS taxonomy that goes with that for a cross-listing, for example. Now, connected with that would be the IFRS sustainability disclosure standards, and they will have a taxonomy as well. So as we speak, the taxonomy team are working on that, because you know that disclosure standards are coming very soon, June, end of June, they're coming. And so immediately we will release a taxonomy that goes with them. Because from the beginning, people have said, all this sustainability disclosure, how we're going to access it and how we're going to manage it. And so from the beginning, there's been talk about how that should be digitalized as well. So a very exciting project is working up a taxonomy, an IFRS taxonomy that's suitable for the sustainability disclosure standards. But when we step back, we think, well, if you've got your sustainability tagged, you would want to be tagging your financial statements as well. And I heard recently from somebody with a large listed company in Australia, and this person was describing how they would be keen to be adopting the taxonomy on both. Whereas Australia at the moment, you would describe them as in the blue box that says IFRS accounting standards. And although the taxonomy is available for use, nobody's using it. But when things change, this person is very keen to be able to use the accounting taxonomy and the sustainability taxonomy at the same time, because this preparer sees them as connected. So probably very near my last comment, but just at the bottom of this slide, I'd like to draw your attention to something that we think about often. This vision of the connectivity between the standards and the taxonomy and the two sets of standards means that we all have a part to play. It's not just the IFRS Foundation saying things, it's about preparers who have got a role. It's about software providers who provide tools, tagging agents who do the work for entities. It's about regulators who require this. And it's about making the information available through some sort of repository, which is often the regulator's domain. Auditors have a role here because this is a new world for auditors when they're auditing on digital, and regulators are a key player in this. And we also believe there's a demand for investors to be able to get the information this way. So multiple stakeholders, everyone has a part to play. Okay, I think I have maybe one more slide, do I, or two? Next slide, please. All right, so when people say to the IASB, please focus more, a little bit more focus, what do they mean? They mean keep working and improving your current IFRS accounting taxonomy. Think about the demand out there for increasing consumption of digital, meaning do you have to change the way you write financial accounting standards because of digital consumption? And thirdly, work with the partners that's working with, say, the regulators or the auditors to enable this digital consumption to happen. Next slide, please. Have we got time for this? How are we going? Yeah. There are challenges around digital financial reporting, and it's important that we recognize it. So although the IFRS taxonomy has been out there and around for a long time, there are various versions of it. And the more you fragment the taxonomy, the less comparability there is. So we're working on that with people. Taxonomies are only, the information's only as good as the tagging. So accuracy of tagging is really important. Comparability in the way people tag, very important. And access. This is only going to work if people have an access source. Right. I would like to go to my final slide. Next slide, please. So I thank you for participating today. I know we might have a couple of questions. I'll come back to Indra in just a minute, but I just want to get to this slide. Thank you for participating. Here's our various places to keep up with us from our website. We're active on social media. We do want to hear from you. You can contact me via Indra, via your National Standards Setter, via IAI, via LinkedIn, via the IFRS Foundation. We have email addresses within the website that you can reach out and contact us. Thank you for inviting me and making me welcome, and thanks for being able to talk to you today. Any questions on
Thank you.
digital?
Yeah, good. Yeah. Is there any questions from the audience? Can you show the question from the audience, if any? Tim, there's at least one question, I guess. Seems there's a technical glitch with that. Okay, this is from the previous one. Okay, so this is something that you've said in your presentation. What about considering connectivity between taxonomy for IFRS accounting standards and the sustainability standards?
There's big connectivity because the same people are writing both. So it's a team. There's one team in IFRS Foundation that writes taxonomy. So big connectivity. So the way we've approached IFRS taxonomy in the past, the guidelines, the principles, the structure is being used with sustainability. Of course, sustainability disclosures are very different to financial disclosures. We're very familiar with financial disclosures. We can visualize a profit and loss statement with all those lines, with the numbers, and then we can visualize a sustainability report with paragraphs of text. But a taxonomy can handle that with something they call block tagging. So visualize the sustainability report with big paragraphs of text information. So that can be block tagged in its entirety. So it's tagged and then it becomes searchable. Where the interesting decisions have to be made is between the two, between the very specific line items with a number and the very large block tag. And so what the team have been really focusing on is which parts of the block tagging need individual tagging in there. That's one issue. So they're exploring that. This taxonomy for sustainability disclosures will come out for consultation. If you work in this area, if you know anything about, you have some interest, please respond to us and let us know. We're very keen to hear what people have got to say on how we're proposing it. So we've introduced a couple of new things to fit with sustainability, something called a categorical element, which is quite easy. It's a yes-no thing. We don't use yes-nos over in financial accounting, but in disclosure, in sustainability disclosure, we use these yes-nos. So that's a little thing that's come in. There is some very big picture things around the sustainability disclosure standards that create that we haven't had to address so much on the financial accounting side, and that is the nested nature of the sustainability standards, because you may know, if you've seen the exposure draft on S1, that's the overarching one, and S2 on climate is very specific. Well, what happens when we get S3, S4, S5, S6? How do you do the nesting of them, and how you make them nest within S1? Do you just tag everything in S1, everything in S2, and S3? So that's one of the design decisions that they're having to look at the moment, which it's new, doesn't really come up over in IFRS. We're very glad that we've got a team that can do that. And when the IASB formed, that the Value Reporting Foundation came into the IFRS Foundation and became part of IFRS Foundation. The Value Reporting Foundation has SASB in there. So that's the Sustainability Accounting Standards Board. that it was set up in America, and they did have a taxonomy. So there's expertise, there's knowledge on how you do the taxonomies. So that's what we've been doing. They're a very hardworking team.
Okay, great to hear that. So I think in the interest of time, so I think we have to close the session because it's trying a bit run out of the time. So we look forward to more projects and more updates from your side. And let's give a big applause for Anne for presenting the IFRS updates in the session.
Thank you very much.
Thank you. And I hand back to Monica. Thank you.
Thank you, Professor Antarka and Bapak Indra Wijaya for a fruitful session. We would like to kindly invite Bapak Ardan Adi Perdana, IAI President, to deliver the token appreciation for Professor Antarka and Bapak Indra Wijaya. Ladies and gentlemen, please join me to give big round of applause for Professor Antarka. Next, Bapak Indra Wijaya. Please give big round of applause, ladies and gentlemen. Now, Professor Antarka, could you please join Bapak Indra and Bapak Ardan for a group picture? One more big round of applause, ladies and gentlemen. Bapak Indra and Professor Antarka, you may return to your seat. Ladies and gentlemen, once again, we would like to kindly inform you, to those of you who joining us online, you are also entitled to get e-certificate from IAI. You are required to join our survey and choose the right answer. The link for attendance and survey is now being circulated on Zoom chat and YouTube chat, also on your screen. You will need to choose the right keyword, and the keyword is Pilar Baru Standar Akuntansi Keuangan Internasional. Sekali lagi, Bapak dan Ibu, Anda akan mendapatkan e-certificate dengan mengisi link absensi atau link survey yang linknya telah kami tayangkan di layar. Bapak dan Ibu harus memilih kunci jawaban yang benar, dan kunci jawabannya adalah Pilar Baru Standar Akuntansi Keuangan Internasional. Thank you, ladies and gentlemen. On behalf of IAI, I would like to deliver our sincere gratitude to all of the distinguished speaker, moderator, and honorable guests, and also participant for your active participation. I would like to kindly remind you to provide your feedback through the link that we have been circulated. Bapak dan Ibu anggota IAI, kami mengingatkan jangan lupa untuk mendownload aplikasi IAI Lounge untuk kemudahan Bapak dan Ibu menerima informasi dan segala update mengenai IAI. My name is Monica Nabilia. Thank you and hope to see you again. Wassalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam. Terima kasih IAI.
Selamat datang di aplikasi IAI Lounge. Melalui aplikasi ini, Anda dapat mendaftarkan diri Anda untuk mengikuti berbagai kegiatan training, membaca SAK online, dan juga memonitor kegiatan PPL yang pernah Anda ikuti. Download aplikasi IAI Lounge di App Store atau Google Play Store. Untuk anggota IAI, silakan login menggunakan email @akuntanindonesia. Sedangkan untuk non-anggota, login menggunakan alamat email yang telah Anda daftarkan sebelumnya. Pada halaman home, terdapat berbagai menu untuk dapat dinikmati, Cek section lounge untuk melihat event IAI, SAK online, CAW Network, dan affiliated campus. Untuk cek jadwal pelatihan dan event terkini, klik menu event. Scroll untuk melihat berbagai kegiatan dan event yang dilaksanakan oleh IAI, seperti seminar, pelatihan, serta workshop. Apabila Anda telah melakukan proses pendaftaran dan telah menyelesaikan proses administrasi, silakan cek list event yang akan Anda ikuti pada menu My Event. Selanjutnya, Anda dapat membaca SAK secara online. Klik menu SAK online untuk langsung terhubung dengan aplikasi SAK online. Gratis untuk anggota IAI. Untuk non-anggota, silakan mendaftar untuk berlangganan. Pada menu Home, terdapat juga section keanggotaan untuk mencari informasi terkini tentang keanggotaan IAI dan ASEAN CPA. Nikmati kemudahan mengakses data akuntan profesional pemegang CA, ASEAN CPA, dan akuntan berpraktik. Selanjutnya, pada section KJA, terdapat menu Find KJA untuk mencari kantor jasa akuntan terdekat di sekitar Anda. Terdapat juga menu materi KJA untuk memperkaya pengetahuan dan kompetensi Anda. Section KJA akan memudahkan Anda untuk mendapatkan informasi lengkap dan terkini seputar kantor jasa akuntan. Terakhir, tepatnya di bagian bawah, terdapat menu berita dan publikasi yang akan mengupdate Anda dengan informasi terkini terkait perkembangan profesi akuntansi, baik nasional maupun internasional, dan pastinya mengenai SAK Update. Selamat menikmati aplikasi IAI Lounge, available on App Store and Google Play Store. Journey to be a professional accountant is just one click away.
Baik Bapak Ibu, terima kasih atas partisipasinya. Room ini akan kami tutup dalam hitungan ketiga sampai bertemu kembali di acara IAI selanjutnya. 1, 2, 3. Terima kasih.